You just talked about Canara Bank as well. Let's take a look at that particular counter. Up and away, 2% uptick coming in as far as Canara Bank is concerned. And on that note, let's also connect with the management of Canara Bank. K. Satyanarayan Raju, MD and CEO of the company, joins us to decode the earnings. First of all, a very good morning to you. I wanted to talk to you about your NII growth. First things first, that was largely flat on a year-on-year basis, largely due to pressure coming in when it comes to the cost of funds. So now that the rate cut cycle has begun, tell us how the cost of funds is going to be evolving. What is your outlook when it comes to that?
From 1st April 2024 onwards, earlier we used to account that penal interest, whatever we have collected from our borrowers, that used to be accounted in the interest income. But because of regulatory guidance, from 1st April 2024 onwards, that penal interest we are now reflecting in the income. So to that extent, there is a dent in that interest income. The second one is in the February, there is a rate cut, and that has continued for the 2 months. And we have a 44% of our book is linked to the external benchmark lending rates. So to that extent, 44% of that advances portfolio, we extended that benefit immediately once the RBI has announced that. These two are the major contributors to year on year. If you see that it is looks flat, but if you see that sequentially, there is a considerable growth from the December to March at 3.20%. Now for the next financial year, NIMS, what we are given the guidance is 2.75 to 2.80. The December quarter, our cumulatively, though we are at 2.80 for the previous year, December quarter, our NIM was at 2.70, and the March we slightly improved to 2.73. Now the 2 times of rate cut has happened, and we are expecting another 1 or 2 times of rate cut will be there in the coming months. The rate cut will pass it on to the depositors, maybe with a gap of 4 to 5 months. So current month, first quarter, maybe we may find it little difficult in the NIMS to maintain at 2.80. Maybe we can manage at 2.73 or 2.75, but thereafterwards, the remaining quarters, we can compensate that. That's the reason we are given a guidance of 2.75 to 2.80.
Okay, morning Mr. Raju, this is Snehi also joining in. Let's talk about your KASA growth, because although your KASA ratio was a little lower than guidance for FY25, KASA growth for the quarter gone by was quite strong for the bank. Do you think this can be seen for the first quarter as well, and where do you think KASA ratio is headed in quarter one?
Growing CASA at 10 to 11%, matching with the business growth, is really a challenge for not only the Canara Bank, all sector banks. That's why I feel that further increasing percentage-wise, I may not be so sure that we can go for the beyond the 32%. Now we are at 31.17%, but we are aiming at 32%. I don't think that we can easily reach the 34-35% in the current coming year. But maintaining at 32% and maintaining matching with that 10% growth itself is a great challenge.
And I also wanted to talk about your loan book growth. That is at around 12%. You've of course guided for 10 to 11%. Do you also think that the corporate loan book growth, that is something that you see that is going to be remaining in the single digits in the financial year 26, or is it just a cautious guidance at this point in time?
Actually, finally at the end of the financial year, corporate book has grown almost to 10%. It's 9.83. This is almost near to the 10%, the double-digit growth. This even after low-yielding corporate advances, we could achieve that 10% growth. That's why we are confident that this year also the corporate credit growth will continue to be at 10 and above. Because already in the April month itself, we have given almost 25 to 27,000 crores in principal sanctions, and already existing sanctions are there, another 25,000 crores. I'm sure that corporate credit will grow at double digit, that is at 10%. That's why we are very much confident. Last time also, if you could see that the previous 2 years, we are always in giving the guidance, we will be little conservative, but we are surpassing that whatever the guidance we are giving with the most comfortable positions. So last time we are given the advances growth at 10%, we achieved 11.74%. Now this time also we are doing that 10 to 11% growth, we are projecting it. I'm sure that we will surpass that.
Okay, and Mr. Raju, before we let you go, lastly, in terms of return ratios, once again, in terms of guidance, you are already at the return on asset higher than guided. Apart from some stress on NIMs due to rate cuts, are there any other levers which can weigh on ROA going ahead?
We are given a guidance even this year that the next year is also 1.05. That's also conservative given whatever is there. If you look at the March quarter, our ROA is quarterly, it is a 1.25. The cumulatively it is 1.09, but March quarter itself is 1.25. That's only because of our higher interest, the net profits. And I think our profits will continue to grow. It's a last 9 quarters. I am seeing that there is a consistency in growth in the net profits, and I don't find any reason to why we should doubt about that. And I'm sure that our net profit growth will continue. That's why we are confident that our return on asset will be more than 1.05, though we are given 1.05.
All right, then profit growth has been steady for the last 9 quarters, and you see that continuing. Thank you so much, Mr. Raju, for taking time out and joining us, helping us decode your earnings fine print then, but with...
If you like this video, then like, share and subscribe to ET Now.